But to give you a little bit more color on the Saudi perspective here versus Iran and Iraq, again, this is not so much about North America, more about Asia. What this shows is that Saudi Arabia's market share is declining in China. Right? And that's the market they care about most. That's the high growth market. Demand in North America and Europe is not growing that great. Who are they losing the market share to? It's not North Dakota, it's not Canada, maybe one day we get our West Coast pipelines. But right now they're losing to Russia and Iraq. Right? So again, in terms of who they're thinking about from a price war point of view, those Russian barrels coming from East Siberia through a Chinese-built and financed pipeline into China, and the Iraqi barrels going right through the Gulf up into Asia as well are really the competitive threat. And this is something the Saudis view with great concern. So on the Iran side, we can see here that since 2011, when the U.S. sanctions were put into place, Iran's production has dropped year after year because sanctions prevent them from getting access to international capital markets, prevent them from bringing in service companies to work over their fields, and prevent some of their key customers like Turkey, India, South Korea, Japan from buying their crude. Right? So the U.S. is trying to squeeze Iran and get them to give up the nuclear program. Probably not going to happen. Right? When the Iranians look at the world, they look at their neighbors. They see their neighbors in Iraq, that the U.S. military basically wiped out Saddam in 3 weeks. They compare that to the situation in North Korea. Right? North Korea, for all their problems, they have nuclear weapons, and the U.S. has never touched them since 1953. Right? So I think the Iranians feel they'd rather be North Korea than Iraq. They would rather have that nuclear deterrent and won't give it up easily. So this suggests more sanctions, lower Iranian exports, and actually probably some support for oil prices in the second half of this year as that Iranian supply tightens up. So to summarize all these factors, what's really going to drive a price recovery here if we're talking about getting from 50 to maybe somewhere in the mid-60s? Right? We'll get some decline in Iranian supply because of sanctions. We're going to have another almost 1 million barrels a day of growth in the IEA's base case in 2015. This growth used to be a lot higher than this. It's slowing down. It's mostly in Asia, but there's still some growth. And then we're going to see some decline in non-OPEC countries like Russia and Colombia. Not much. Think about those countries declining 300,000 barrels a day. Not much in the context of a 93 million barrel a day market. But the current surplus, the gap between supply and demand, or the excess of supply versus demand, is 2 million barrels. Right? So you put all these things together, you can see how prices might rise towards the end of the year. A little bit more demand, less supply from Iran, less from Russia, less Colombia. Surplus starts to diminish, prices might go up a little bit, especially into 2016.